On March 15, 1971, President Richard Nixon stood before Congress and made a declaration that would reshape the global economy. He announced America would no longer honor its promise to convert dollars into gold. The Bretton Woods system, which had anchored international finance for nearly 3 decades, died that day. What Nixon didn't say was that America was broke. The Vietnam War had drained the treasury. Foreign governments were demanding gold for their dollars, and Fort Knox couldn't deliver. So America did something unprecedented in monetary history. It made its debt everyone else's problem. The dollar became the world's reserve currency, not because of American strength, but because of American cunning. This is another video where money, power, and history collide, and nothing is ever as simple as it looks. The story begins in 1944 at the Mount Washington Hotel in Bretton Woods, New Hampshire. World War II was ending, and the victorious Allies needed a new monetary system. The British wanted to maintain the pound's dominance. The Americans had a different plan. John Maynard Keynes represented Britain. Harry Dexter White spoke for America. Keynes proposed an international currency called Bancor, backed by commodities and managed by a global central bank. White countered with something simpler: make the dollar the world's money, backed by gold at $35 per ounce. America held 2/3 of the world's gold reserves. The choice seemed obvious. Every major currency would peg to the dollar. The dollar would peg to gold. America promised to exchange dollars for gold on demand, creating what economists called the golden anchor of global finance. For 27 years, this system worked. Countries accumulated dollars to buy oil, conduct trade, and build reserves. The dollar became the lingua franca of international commerce. But every system has a fatal flaw, and Bretton Woods had a big one. America could print dollars, but it couldn't print gold. The mechanism was elegant in its simplicity. Foreign governments and central banks held dollars as reserves, trusting America's promise to convert them to gold. America used this trust as a printing press, spending dollars it didn't have on wars it couldn't afford and social programs it couldn't fund. By 1971, America had printed $56 billion in overseas dollars, but held only $12 billion in gold. The math was catastrophic. If even half the dollar holders demanded gold, America would default. France saw the problem first. President Charles de Gaulle called the system America's exorbitant privilege and began converting dollars to gold. He wasn't alone. Britain, Germany, and Switzerland queued up with their own demands. America faced a run on the bank, and the bank was empty. Nixon's solution was breathtaking in its audacity. Instead of honoring America's promises, he simply broke them. The gold window closed permanently. Foreign governments holding dollars could keep them or sell them, but they couldn't exchange them for gold. The world screamed. Finance ministers called it theft. Newspapers declared the end of American financial leadership. But Nixon had calculated correctly. The world needed dollars more than America needed gold. Oil was priced in dollars. International trade flowed in dollars. Central banks had built their entire reserve systems around dollars. Abandoning the currency would crash the global economy. So the world made a devil's bargain. They accepted worthless paper backed by nothing but American promises. The transition wasn't smooth. The 1970s brought inflation, recession, and currency chaos. But America had achieved something unprecedented in monetary history. It had created a global tax system where every dollar holder subsidized American spending. When America runs deficits, it pays with newly printed dollars. Other countries must earn dollars by selling real goods and services. They ship America cars, electronics, and oil. America ships back pieces of paper with presidents' faces on them. The system creates what economists call global seigniorage. Like medieval kings who minted coins worth less than their face value, America profits from every dollar printed. The difference is scale. Medieval kings extracted wealth from thousands. America extracts wealth from billions. China holds $3 trillion in dollar reserves. Japan holds $1.30 trillion. These aren't investments, they're hostages. Both countries must keep buying American debt to prevent their own currencies from rising and destroying their export economies. The arrangement suits America perfectly. It can finance massive deficits without consequence because the world has no choice but to accept American IOUs. Every foreign central bank becomes a captive customer for American debt. The system survived the Cold War, the dot-com crash, and the 2008 financial crisis. Each shock reinforced dollar dominance as investors fled to American assets. The more unstable the world became, the more indispensable America appeared. But empires built on debt carry the seeds of their own destruction. In 2008, China began questioning why it should subsidize American consumption while its own people lived in poverty. Russia started accumulating gold and reducing dollar reserves. The European Union created the euro as a dollar alternative. The 2020 pandemic accelerated the trend. America printed $6 trillion in 2 years, devaluing every foreign dollar holder's wealth. Countries began asking why they should finance American stimulus while their own economies collapsed. Today, the signs of revolt are everywhere. China and Russia trade in their own currencies. The European Union created a payments system independent of American banks. Central banks are buying gold at the fastest pace since 1971. The names have changed, but the pattern hasn't. Every reserve currency in history has eventually collapsed under the weight of its own privilege. The Spanish peso lasted 110 years. The British pound managed 105 years. The dollar has ruled for 52 years. America built its modern empire not through conquest, but through accounting. It convinced the world that American promises were worth more than gold, that American debt was safer than any asset, that American power was permanent. The greatest trick America ever pulled was making its creditors believe they couldn't survive without their debtor. For 50 years, the world has funded American power, while America has grown increasingly unable to project it. The system works until it doesn't. Every Ponzi scheme has the same trajectory: spectacular growth followed by sudden collapse. The difference is scale. When this one fails, it won't just bankrupt investors. It will reshape the global order. Money is belief made manifest. For half a century, the world believed in American promises. That faith built the modern global economy. It also created the largest wealth transfer in human history, flowing from the world's poor to America's powerful. The people who control the world's money don't need to break the rules. They just need to write them.